Hello, everybody, and welcome to this week's GoNoGo Show. I will be doing it solo today. Tyler has been called away to travel to some beautiful location, I think, this weekend, but we will see him again next week on Thursday, as we do every week. But let's get started. I want to start, as we usually do, with our GoNoGo asset class heat map. And what we're looking at is not a lot of change. We can see that the equity markets in the top panel are hanging on to their go trend, but that trend has weakened to paint paler aqua bars. And we can look in the second panel to see that Treasury bond prices remain in their strong no-go. Commodities are staying in a no-go and have actually strengthened today to paint purple bars. And the dollar, of course, still in a go trend, painting strong blue go bars. So we'll have a look, as we always do, through our macro factors to see what kind of an impact those could have on equities. There's obviously been a lot of discussion, a lot of doom and gloom, a lot of headlines out there, but we try to ignore that and focus on the charts. So let's start by looking at the S&P itself. So here are our domestic equity markets represented by the S&P 500. And as I said earlier, you can see that we are hanging on to this go trend. Now, we've made a slightly higher high, but we have fallen away from that and are painting weaker aqua bars. But the weight of the evidence here still suggests that we are in a go trend. You can see today we opened higher, we traded lower, and we've come right back to where we started. Of course, I'm recording this just after lunch on Thursday, so we'll see where this bar closes. But of importance is that after we broke out of the GoNoGo squeeze, this max GoNoGo squeeze you can see here in the oscillator panel, we have now returned to test that level from above. So that little break that moved us higher, we are now testing that as investors maybe digest some gains that they might have had, and we're now back at zero on the oscillator. So very, very important to see if momentum remains in the direction of the trend. So just as a quick recap for anybody that's watching our show for the first time, what we do is we take a checklist of technical tools, some of the most foundational, robust trend following ideas, and blend them into an indicator that color codes price based on its trend strength. The blue and aqua colors are a go trend, purple and pink are our no-go trend colors, and the amber bars represent uncertainty and often happen in transitionary periods between trends. And then, of course, after trend identification, you turn to momentum, and we've done the same thing with our oscillator, where we've blended several inputs, short-term, longer-term, multiple indicators into an oscillator that gives us a view of momentum without overwhelming our price panel, because everything is in one panel. We've got volume in here. When the oscillator turns dark blue, we know that volume is heavy. And we also can see volatility with this climbing GoNoGo squeeze grid. Every bar that the oscillator remains at zero, that tells us that there is very little directional momentum. The grid climbs to a max. So we can see squeezes in that way, volatility, compression. So that's a quick review. That's where we are on the S&P 500. Now, a lot of people are saying, now, will we retrace from here? Will we fall back to these lows that we see on the chart? Well, we could potentially. And what would make us think that is going to happen? Well, the first thing would be a break below zero on the oscillator. If the oscillator crashes below into negative territory, that would likely lead to a larger correction and potential trend color change in the price panel above. But right now, as I said, hanging on to those go colors, weight of the evidence still says we're in a go trend, oscillator looking for support at the zero level. Let's jump this out to a weekly chart, and you can see that things are looking okay still on the larger time frame. After the oscillator broke into positive territory, retested several times, we saw all of that uncertainty play out on the weekly chart with all of those amber bars. And then, of course, we moved into a go trend, and now we've been painting bright blue go bars for a couple of months. Now, yes, we do see, of course, this overhead supply, this resistance from earlier in the year, and also, of course, the summer of last year. These are going to be areas that we would love to see price get above and consolidate above. But the oscillator is in positive territory, not yet overbought. So we've got positive momentum on the side of the go trend on the larger time frame. So let's change tack here and look at Treasury rates. We saw on our heat map that Treasury bond prices, not rates, have been in a no-go trend. So we would expect, therefore, rates to be rising. And that is, of course, what's happening. We can see that we broke out of this correction. Go colors strengthened now to stronger blue bars. So rates rising. Of course, we're in an elevated rate environment from where we were historically, of course, but still low relative to the multi-decade downtrend in rates that we saw. So maybe some slightly elevated rates from where they've been, but perhaps the market okay with the fact that rates may stay elevated, but neither go too high or too low. And that's allowing the equity markets to hang on to that go trend. But again, we are seeing some rising rates in the very short term here that's bumped us out of this no-go trend. Let's take a look at something else. Let's take a look at gold. Gold has been, of course, of interest to us of late. We talked about the large monthly time frame cup and handle pattern that we saw, and a lot of discussion when we were hitting these highs. Would we break higher to all-time highs and of course then potentially be off to the races? Well, that didn't happen. We were told with the oscillator breaking below zero, and then of course the trend color change as well. So we're now seeing this is GLD, of course, that we're using to represent gold. We're seeing GLD in a no-go trend, and those bars are strong purple. So nothing to suggest just yet that we're going to see a return to the go trend. The oscillator is nicely in negative territory, confirming what we're seeing in the no-go trend in price. So gold suffering a little bit of price action to the downside. What about the dollar? I mean, let's do oil first. What about oil? Oil, we have been looking at this on the weekly chart because that's the clearest picture, and you can see nothing doing here on oil. Still a very slow-moving downtrend. We're seeing compressed volatility, small price action. You can see how the oscillators struggle to get away from the zero line. Where are we right now? We're right back at the zero line, testing it from below. If the oscillator holds as resistance and the oscillator falls back into negative territory, we'd expect price to move lower still, creeping lower in this downtrend. Of course, a bump higher into positive territory on the oscillator would give price the chance to at least test the upper bounds of this downward sloping no-go trend. So that's where we are with oil. Let's have a look at the dollar as well. And there's some movement on the dollar. We talked about this last week, how the price action we'd seen on the daily was enough to break this extended max go-no-go squeeze, positive momentum moving into positive territory out of this large go-no-go squeeze. Now we can see that we are just about testing resistance from these prior highs. So this is going to be an important moment here. Can we get above and consolidate above these price levels? Let's have a look at what that looks like on a daily chart. And you can see that we did break out of multiple go-no-go squeezes with the oscillator into positive territory. That led the price change in the panel above. First an amber bar, then a few aqua bars before the string of stronger blue bars that we've now seen. You can see us gapping slightly higher today, and we're right around the highs from March. So the dollar looking fairly strong, but there is some resistance at these levels from prior highs. So as we typically do, that is an overview of the macro factors that we like to look at every week when we go through our analysis. Let's jump now to our sector RelMap, because it's important to look underneath the markets to see what's really driving the performance. And we're talking about how the equity markets are hanging on to their go trends. But what's allowing them to do it? It's obviously the growth sectors. You can see our RelMap here, where we've taken each of the sectors relative to the S&P and then applied the GoNoGo trend concept to those ratios. And you can see that the market as a whole is being held up by the growth sectors. You can see technologies in a go trend, communications is in a go trend, discretionary was in a go trend, today is relative to the S&P painting an amber go fish bar of uncertainty. But the rest of the sectors all underperforming relative to the base index. So this really is where the outperformance is coming from. It is coming from these growth sectors. So what I thought that I could do on today's show is run through some tickers that we are seeing as outperformers, and a couple perhaps that are offering an opportunity to get into that trade, as well as we'll round it off by taking a look at the cryptocurrency markets as well. But we talked just then about the outperformance of the sectors. Let's take a look at how we can do that on an individual sector basis by using the ratio functionality here in the StockCharts platform. So if we take something like the XLK and look at that relative to the SPY, we can put this in as a ratio. And now this is applying the GoNoGo trend chart to the ratio of technology to the larger index. And you can see how generally we've been in a go trend. That ratio has been trending in a go. Of course, we know that when the ratio is moving higher, then that's relative strength, but we can get a sense of the trend and how that is moving through its phases by looking at the GoNoGo charts on a ratio. What we saw, which was interesting, was this break below the zero line on the oscillator, but now back above the zero line, breaking out of a GoNoGo squeeze. So we've got positive momentum, very strong momentum, in fact, overbought momentum as price races higher. So technology outpacing the S&P in strong go bars. Let's take a look at another of the growth sectors. Let's take a look at the communication sector, the S&P, and very much the same picture. We had a little bit of a wobble here with some uncertainty, and then we had one brief moment where momentum really shot lower and allowed us to paint a no-go bar. But generally speaking, outperformance from the communications sector relative to the S&P. Again, at the moment, making a new high, strong blue bars. So if we were to capitalize on that and take into consideration that outperformance or that strength of these growth sectors, then we can take a look at any number of securities that perhaps would allow us to position ourselves to take advantage of that. I'll pull up a couple that have been favorites of ours for a few weeks or months, and then a couple that we are looking at perhaps right now. So let's start with Meta. This has been an incredibly strong performer of late this year, since the beginning of the year, or even since the end of last year. We saw the go trend take hold, and then we saw the support as momentum rode the zero line, and that allowed the max GoNoGo squeeze to climb, and then we broke out of it. We saw a significant rally. And of course, throughout this trend, we've had multiple trend continuation icons. What are those icons? These are the green circles that tell us that momentum is resurgent in the direction of the go trend. So when a go trend is in place, if the oscillator crosses into positive territory, finds support at that zero line, we're going to get trend continuation icons. And that tells us that the trend is likely to continue. And look at the strength of this trend. After a gap higher and a pullback, we know gaps will provide support. We found continuation icons. We moved higher. Another gap higher. We know that this gap should provide support. We've got another continuation icon as prices move to another higher high. So Meta, strong go trend, oscillator in positive territory, approaching overbought. Very, very strong looking chart for Meta. That, of course, in the communication services industry, and we've broken down the sector, the communication sector, over the last several weeks and talked about how it is internet services. It's the internet subgroup that's been driving the outperformance within the communication sector. So no surprise to see Meta doing so well. What about Apple? Apple, of course, one of the most heavily traded securities. And yes, technology company in a very strong go trend. You can see this series of higher highs and higher lows. As we move through the trend, you can see all of these trend continuation icons each time the oscillator finds support at zero. Well, important moment right now. I'm going to take a sip of coffee while we look at the chart and think about what is important that's happening right now. You can see that it's the zero line coming into play again. So we've got the oscillator falling to test the zero line from above. If we hold and find support here, then we will get, as we have so many times already, trend continuation in the form of a green circle icon. So we'll be watching the zero line closely here to see if it fails or if it holds and finds support again. Another one in the technology space, AMD, Advanced Micro Devices. And we've talked about semiconductors ad nauseum over the last several months and how they've been an outperformer in the sector. And you can see again, after a longer correction, this is a really nice example of how you might use the full GoNoGo chart to manage the life cycle of a trade. If you are happy with some gains, looking at this pullback and then seeing the oscillator break out of a max squeeze to the downside into negative territory, you may take some of your position off the table, or you may close out that position and be happy with the gains. And then you can see that leads to a longer correction. And so you would have limited your drawdown there. Once the oscillator gets back above zero on positive heavy volume, as you can see the oscillator going dark blue, once we get back above zero on heavy volume, we can then be looking for opportunities to get back into this trade. And you can see the go trend being picked back up, and then of course prices racing higher. Look at that gap higher today, higher gap, a very impressive day. Not only gapped higher, but is trading currently higher than the open. So all good signs at the moment for AMD. Of course, we are overbought, so potentially could see some counter trend correction arrow coming in as we move lower on the oscillator, but of course, no reason to be concerned about a go trend when the momentum is positive. Okay, so what's the big security that I would be remiss of me not to mention? Of course, NVIDIA today gapped remarkably higher. What a chart that is. And you can see how we gapped, $80 higher, $85 higher today, and still trading at those levels. So not a lot of pullback yet, even after such a high opening gap. But look, you can see the go trend picked up in January. You can see the opportunities to participate with go trend continuation icons as the oscillators found support at the zero level. You can see some real sideways movement here for just about a month or month and a half perhaps. But continuation icons continuing to come in as the trend maintained go colors throughout that sideways movement. And then, of course, we rallied into this gap. So where are we now? Well, we are painting a strong blue go bar. Price has gapped higher, of course. oscillator is moving back towards overbought territory on heavy volume. So a lot of market participation in what we're seeing in NVIDIA. So very strong trend in place and a remarkable day today. Let's pull up one more. I'm going to pull up the chart of Shop because this is something that we sent out to subscribers looking perhaps for a nice setup to participate in the outperformance of the technology sector. So we can see a go trend established here earlier in the chart, and then we can see multiple squeezes as price moves sideways. Now, we know that when the squeeze is in effect, we're seeing reduced price volatility, and we look for the break of the squeeze to inform us of the direction price may take. So far, we have seen the zero line hold every time the oscillator has tested that level. And we saw a max squeeze build up here. And then, of course, that was broken on a gap. And we moved into a new high, which then we've pulled back from. So remember, when the oscillator comes back from overbought, we get a counter trend correction arrow. And that tells us that price may struggle to move higher in the short term, but it certainly doesn't mean the trend is over until we see the color change in the price panel. So in the short term, prices may move lower, may correct against the trend. Now, we can expect a couple of things here. We can expect support from the top of this gap. We also are looking at the oscillator here to see if it finds support as we build another max go-no-go squeeze. So as investors digest these gains, we're watching the pullback to see if support is held here at the zero line. If it is, then we would expect price to rally and potentially test these recent highs and look to make new ones. So Shop one where not the runaway success that we saw with NVIDIA and Meta or Apple even, but definitely one to watch if you're looking for perhaps an opportunity to participate in the outperformance of the technology sector. Okay, so I always feel like I'm doing a lot of talking when I'm on my own, but hopefully that's been helpful. Let me take a quick look now before we go at our crypto RelMap, because there has been some significant movement over the past couple of weeks. We've talked about this before. Cryptocurrencies underperforming relative to the equity markets. We've shown this map over the last couple of weeks. So that is one thing to be aware of, is that the cryptocurrency space right now is underperforming the equity markets. And if we look at just Bitcoin on its own, we can see how you can follow the same process with GoNoGo Charts using cryptocurrencies. We saw a nice gain. We saw failure out of the max go-no-go squeeze that led to a larger correction in no-go bars. And we saw another move in a go trend before we rolled over back into no-go bars. But the point that I wanted to just highlight is that we are currently still finding the zero line to be acting as resistance. So as prices moved lower on these purple and pink bars, we are seeing continued trend continuation to the downside. So those are red circles now because the no-go is in place. So we're going to watch and see if that holds, the zero line continuing to hold as resistance. If we move a little bit more into negative territory, that could really allow price to deteriorate further. If, of course, we're able to come back and break into positive territory, then we may be looking for reversal back to a go trend in Bitcoin. That is just about it from me. If you are following this on StockCharts TV, that's fantastic. Don't forget to check out the app for the StockCharts TV so you can take this content and all of the other great content with you wherever you are. Also, like and subscribe on YouTube. Check out our YouTube channel as well. We have a lot of content on there, as well as, of course, on our website at www.gnogo.com. www.GoNoGoCharts.com. Thanks very much, everyone, for watching, and we will look forward to running through the markets again next week. Have a great Memorial Day weekend if you're in the US, and see you on the other side of Monday.